Joining me now, my pal Art Laffer, former Reagan economic advisor and Presidential Medal of Freedom recipient. Hello, Art. Great to see you. Art, a couple things. Just knock them off at the top. Really bad inflation numbers this week. CPI is up 8.3, PPI is up 11%. Today, import prices are up 12%. The month of April was flat, but the prior month got revised up again big time. So 8.3, 11, and 12. Those are very nasty inflation numbers. That's point number one. And then, Art, the second point I want to raise with you, Jay Powell, who just got confirmed as Fed chairman second term. So he gave an interview to Market Watch, and it was a perfectly fine interview. I thought the interviewer asked a lot of great questions. But I just will say, Art, repeatedly, Jay just kept saying, we are going to get the inflation rate down to 2%. He must have said it, 15 times. Almost every answer he gave. And then he talked about how he's got to restore price stability to restore the economy. And then he has this concept, well, there's demand and supply, and we the Fed can control demand and we can reduce demand, but we can't control supply. I guess there's something to that. But he just kept repeating it over and over again. So what do you make of this story, and do you see any evidence that the Fed is restraining inflation?
Well, any evidence is a very low bar, but you're right. We've had three very bad inflation numbers. This inflation cannot stay at this level, Larry, especially when the numbers that are being dropped off are very high, because that's when the inflation rate should be coming down under natural. I don't see any signs, Larry, that this inflation period is slowing down at all. The core inflation was up, by the way. So, you look at all of these numbers, and then you look at Powell being confirmed, and looking at what he's talking, well, we're going to raise it 50 basis points. If you want to bring inflation down and you're the chairman of the Federal Reserve Board, you need to make interest rates above the rate of inflation, period. That's what Paul Volcker did. That's the only way to bring that down. And he's not doing that. He's not thinking about that. And then they talk about the trade-off between inflation and the economy and the recession. And that's nonsense, Larry. I have never seen stable prices lead to anything other than a strong economy. So stable prices and a strong economy go hand in hand, Larry. They're not a trade-off. If you have health in the inflation picture, you'll have health in the overall economy. And that they don't see. They think we can bring inflation down, but it'll kill the economy. Or to get the economy strong, we're going to have higher inflation. Not correct. Not correct at all. And that's what you and I have been saying for a long time, by the way, and the Fed just doesn't believe us.
Well, I think, it's interesting to me. I don't want to obsess about this interview, but it was a lengthy interview, more than you usually get from Jay Powell. I think he's somewhat bewildered and confused because he says both things, Art. You know what I mean? He says, on the one hand, he says, we can't have a strong economy unless we get back to something he calls price stability, which I guess means 2% inflation. Okay. Yes. He says that. But on the other hand, he says, well, I am worried that if we do these things, it's going to damage the economy and the labor market. So he's kind of like, he just can't pick. Yeah, it's a strange thing. Whereas if you go back 40 years, Paul Volcker used to repeat time and time again, and so did Alan Greenspan, that it is price stability that generates growth. Price stability, no ands, ors, buts about it.
Yeah, and poor Powell, I mean, he's not trained for this job, Larry. He's not a Paul Volcker. He's not an Alan Greenspan. And those are two wonderfully strong Fed chairmen. And they worked miracles, by the way, in the economy. I mean, what you really need to do is get a stable valued currency. You can do it in many ways, but one of the ways is raising interest rates above the rate of inflation to bring down the growth in the supply of liquid assets that will be feeding the system. You don't stabilize the currency by making the economy weak. He said you can control demand. The Fed can control demand. My foot, it can control demand. It can't. If it brings demand down, you will see the economy's inflation going higher. Goods and services, production does not cause inflation.
Well, and of course, you're not getting any help from the Bidens. I mean, it's very amusing. Biden energy policy, they just knocked out leases in Alaska and the Gulf of Mexico and the regulatory burdens. And Biden said on Monday he wants to raise taxes. He wants to tax those awful rich people, Art. You know that? Just people are not paying their fair share. Elon Musk paid $11 billion in taxes last night, but it's not his fair share. Elon Musk even paid more in taxes than you did, but it's probably close.
Hey, Larry, let me tell you what is going well. Let me tell you what is going well. The tax cut, the Trump tax cut, the 2017 Tax Cut and Jobs Act, that's raising revenues dramatically into the system. That's wonderful. The other thing that you and Steve Moore deserve enormous credit for is Stop the Bill. And, you know, Build Back Better was stopped by you. If that had gone through, this would be a much worse situation. Those two have contributed enormously to keeping inflation from being what it otherwise could be, a lot higher.
All right, last one. I mean, let's stay with the Trump tax cuts. Do you think it's just a coincidence, a happenstance, that lower marginal tax rates, in this place, especially on companies, were accompanied by A, strong growth, B, more people working, and C, lower inflation, which is baffling to the Fed. Do you see what I'm saying? The tax cuts, there was no inflation with those tax cuts, for heaven's sakes, even while more people were working and earning. Last point.
You know, very clear. I mean, this book I've got coming out with Brian Dimitri and Gene Sinkfield looks at the whole history. It calls Taxes Have Consequences. What you find is that high taxes lead to slow growth, lead to high inflation, and lead to poor economy, period. And revenues fall when tax rates are high. Rich earn less money, and what they do earn, they shelter, and so the revenues don't come in. Under Reagan, we had dropping inflation and a strong economy. Under Kennedy, we had a great economy. We had controlled inflation. All the tax cuts periods were perfect, and I don't want to go over my time, but they have got it just exactly wrong, and poor Powell just is not equipped to be able to handle this type of situation under this type of pressure. I feel very sorry for the man because he's just not equipped to do this job correctly.
No, he's a nice guy, but it's funny. You and I know the left.
He is a nice guy.
The radical progressives in the White House don't understand this and never will. But it's too bad, Art, that the Fed and the Fed staff that do the econometric work and the economic analysis, they don't get it either. They have the wrong model.
And they don't invite people in. They don't invite people in to talk to them either. I mean, they try to be insular. They don't want to listen to what's correct, Larry, at all.
All right. Well, the Fed used to invite people in. That's a very good point, Art Laffer. Anyway, thank you, my friend. Have a wonderful weekend.